Welcome back to the watch list. Let's jump right into the technology trade. Michael Robinson, Chief Technology Strategist at Money Map Press in San Francisco, California. It is great to see you. So what are you thinking? I mean, are you still loving tech? Is now the time?
Yeah. It's hard for me to get out of bed. I fall in love with tech every morning when I get out of bed. I'm not kidding you. It's just like, if you look at just weeks ago, warning signs all over. Oh my God, recession and tech is going to get battered and it's going to be terrible earnings. And we're basically, the second quarter is pretty much all but closed. There's a few on my radar screen that haven't quite reported yet or are going to report this week or early next week. But across the board, it's been awesome. I mean, in chips, you saw Texas Instruments, Intel, NVIDIA beat on earnings, web-related firm, Google, Alphabet, the parent company, Facebook, they beat. Electronic Arts, which is a play on, obviously gaming, but the new area of esports. Twitter's having a fabulous year. I mean, when you look across the tech landscape, you still see high growth in sales, earnings, and you see really fat profit margins, which is that all falls to the bottom line, and then it's going to drive the stocks higher. I think tech will continue to lead the market higher from here.
You just mentioned 6 great companies, right? Google, Facebook, Texas Instruments, Intel, Electronic Arts, and Twitter. Are all of those names that someone should buy into a little bit, maybe on a dip, or are those all good names for the long term?
Yeah, I'm a little cautious on Electronic Arts right now. I'd actually like to see one more solid quarter, but you can't argue with the results of this particular quarter. They beat by something like 60% on earnings, so that's pretty fabulous.
Okay.
Yeah, for the long haul.
How about Roku? I mean, Roku's up 370% this year. I mean, that was one name I saw in your notes. I mean, but that's already such a big gain.
Looking at it so expectations are important. It's an excellent point. And expectations, I think, are going to have to be a big part of getting in here. I think there's probably not anybody who's watched what's happened with Roku over the last 6 months who didn't wish they'd gotten in 6 months ago. But if you look at the growth in earnings and sales, I think this is a good long-term investment. I don't think you're going to see it grow in value 60% year to day, from now out or in the next 6 months. I would have more realistic expectations on Roku. I mean, you look at the number of users they have, something like 139 million now. It's a pretty big jump for them. So it's a pretty good platform. They're learning better about how to monetize it. I do like that stock. I would get in now, but I would be a little bit more cautious in my expectations. I don't think you're going to get a double on this stock.
How about a name like Apple?
Apple is always a long-term buy for me. That's one that I would buy on the dips. Overall, the company's been doing very well. I've had, last time you and I talked, we talked about Apple. They're a little bit of a difficult transition right now. I think they're going to come out of it okay. I do believe buying the modem business from Intel was a very good decision. I'm looking for them to join the upgrade cycle for 5G with the iPhone that comes out in 2020. The services business continues to grow. They continue to execute there across the board I've gone from listening to Pandora every day to very rarely listening to it. I'm just using this as an anecdotal insight, but everyone I talk to says they're shifting to Apple Music from one of the other services, Spotify's. They're getting growth against Spotify and against Pandora, which, as you know, just got bought by SiriusXM. So yes, I do like Apple for the long haul.
Yeah, and I just took a peek at the NASDAQ, the tech-heavy NASDAQ. It's down 0.25%. All right, Michael Robinson, Chief Technology Strategist at Money Map Press. Great to see you.